Good evening, good afternoon, good morning, everyone. I came across an interesting article from Jeffries in Seeking Alpha. I'm just going to go critique this article through a short video. This is my agenda, and I'll keep it very sweet and simple. Here's my bio. As you can see, I have a diverse background. I've been working in financial area for well over 35 years, and I've seen a lot of different transitions or transformations over that 35 years. Here's what I do every week is I basically track the stocks and I do a monthly or weekly report. Part of it is because I'm working with clients in different industries and geographies. I want to understand what's going on in a particular market or what factors are driving decisions made by my clients or prospects. Here's what's happened in September 19th. This is the last stock market closed on Friday. What you can see is the Dow Jones, the S&P 500, and the Nasdaq all finished the week on a high note, while the Russell Index was a bit of a decline. And if you look at the companies, and they do this each day from CNBC, you see the top 5 companies, and they're seeing a lot of transitions. But if you look at Paramount and Newmont, these are companies actively going through their capital allocation models, and decisions are being made around what they move forward in terms of their asset management. Oracle's in the news because Oracle's stock had seen a significant improvement over the last little bit. Their continual focus on AI and other areas of IT and technology solutions is driving their stock price to the point that it's possible, and this is just my perspective, that it may end up splitting. So it's something to bear in mind. And you look at other companies like Dollar General, retailer, then you look at Fortinet, which is a security company, Amgen, which is biotech. But what's interesting is even some of the areas around technology. Intel's interesting because they receive sizable cash infusion from NVIDIA over the lease. Cognizant Technologies is a business partner that drives multiple solutions, and they've also been in the news quite frequently over the last little bit as well. And then down below, you're starting to see Apple, and then of course Chevron and Walmart as well. Now, this is the what's happening right now. Is a lot of the stock prices, the portfolios have had a pretty good year. Didn't start off well just because of the policy pivots from Donald Trump over the last 9 months, but we're starting to see some significant areas now beyond just the tech side, a potential growth or strategy when you're managing your portfolio or when you're working with your clients. And one of the examples is Best Buy. Well, Best Buy is doing a lot of different pivoting around their strategy in terms of working with IKEA, working with other technologies as part of adopting digital footprint and all that. And they're also looking at basically just their overall product suite. You also see in here Nike. Nike basically has really moved forward with more and more changes around how they do their direct retail operations. That's something of significant. And McDonald's has been pivoting aggressively on their menu and just some of the areas around how they're leveraging AI to drive their performance. And then you got some healthcare companies as well. And they vary too, depending on what's going on with Medicare and depending on the focus of the pipeline in terms of what's coming off pipeline, as well as in terms of technology and med tech, because more and more is looking at the Internet of Things and driving things. So this just gives you some examples here what's going on in healthcare. On the financial side, Blackstone is mostly well aware of is a heavy company that makes strategic investments and equity investments in companies. And they cross sectors, but a lot of their predominantly focus has been around the ESG side, environment, social government side, on the technology side as well. You're also seeing their Capital One and Discovery. This is getting in the credit card area, managing it. And of course, Performance Food Group, which is a food distribution area. They're highlighting energy as well. Like energy has made some significant attention due to how they're positioning, working with big customers like Meta, Google, and Amazon around power build out for the data and AI requirements for the data centers. So that's something to bear in mind as well. Expand energy, we're starting to see a lot more capital investment due to favorable policies in the U.S. around natural gas. Canada's made a few more announcements about expanding natural gas up into Prince Rupert, so it's something to bear in mind. If we look at this, and this just gives you a good example of key stocks that have seen significant growth. Palantir has done sizable deals, whether it's partnerships with the chip companies and technology in general, or with the defense industries around contracts. So they're growing. Newmont and other companies have made strategic decisions on asset acquisition. Same with GE Vernova. So this kind of gives you an idea why there's some growth, because the investors are seeing uptick with these companies in terms of their market plans, both short term and long term. This gives you an example of where we've seen some decline in companies over the last little bit. Um, each company has their own little challenges, and I would encourage you to go read some of the quarterly announcements and other people reviewing this stuff. But this gives you some examples of some companies that have had some struggles this year. If we look at the top sector performance, if you look at the top little one, they're financial service and technology, which typically are blue chip stocks. And then you get down further and further down in real estate and energy and all that have struggled a bit more this year. But again, they're heavy debt. Things have challenges with interest rates are more viable, more impacting those companies directly. This is my blogs I've done directly on markets. Like each Friday I do one. I actually do daily updates as well because I'm very much into knowledge sharing as well. And you can see here there's some links and stuff like that as well. Now I'm just going to summarize, as you can see here, is what's really transpired over the last 9 months, because we're basically 8 months into a 4-year mandate of Donald Trump, and we're starting to see NATO commitments. Those commitments now are starting to come up to signing contracts or the procurement cycle. The rise in AI is doing the adoption of the data center build out. USA policies in terms of foreign direct investment, it's the commitment to bring back near shore, whether that's biotech, whether that's the chip manufacturing, whether it's automotive. It's a cross section where you're seeing commitments from industry. Addressing stagflation, you don't hear that term talked a lot, but basically what that is when your inflation rates are higher than your growth rate, you're in stagflation. We're starting to see anemic growth rates that are below the 2%, and inflation in general, depending on where you are, is running anywhere from 0.5% up to 2.5 to 3%. So if your GDP growth is less than that, then you're facing considerable pressures with stagflation. All levels of government are faced with fiscal challenges, whether that's revenue or whether that's program delivery. They're all facing tough decisions on how they're going to operate. Affordable housing is driving real estate stocks and construction sector in terms of how you bring that in alignment. China just made some announcements over the last week or so about what they're bringing online with lithium. It's something to bear in mind as well. And Medicare reforms are driving what's happening, decisions in medtech, pharma, biotech decisions, as well as the delivery models for healthcare, whether that's private or public delivery models. And can't leave without talking a bit about farmers struggling with commodity prices and food costs. And this is a concern because I've seen farmers throughout my career struggling depending on what's going on with commodities and their input costs or crop yields. And energy policies continually are moving forward to small modular nuclear reactors. Whether you're looking at NuScale or OPG in Canada, we're starting to see commitments and build out of that. And there's still priority in the natural gas plants. This is how you can reach out to me. Here's my email. I make these videos public on YouTube. I write blogs. You're more apt to follow me on YouTube or on LinkedIn. And if you want to reach out to me directly, you can either via my social media ways or Google me. Or any way I can help assist you as part of your long-term and short-term growth strategies.